HARP program options for underwater homeowners slashes monthly payments. I'm going to show you how to use a HARP program loan to refinance your home mortgage to lower your payments, your interest rate, and without bothering with appraisal results. The Home Affordable Refinance Program, also known as HARP, is part of the Obama administration's plan to help underwater homeowners save their home by allowing them to refinance into a more affordable rate or more desirable loan term to reduce their monthly mortgage payments and to avoid foreclosure. You might be eligible to take advantage of the improved changes to the Home Affordable Refinance Program. Even so, your mortgage has to be owned or guaranteed by either Fannie Mae or Freddie Mac, and you have little or no equity in your residence. Precisely what is the HARP Refinance Program? The HARP loan was established to help house owners in refinancing their mortgage when the market value of their home has dipped below their present-day mortgage balance, making typical refinancing no longer an alternative. The HARP program loan is a federal government loan program that was upgraded lately to help additional homeowners who have underwater mortgages. Ever since plenty of mortgage borrowers were caught in a period of dramatically dropping house values, there certainly was a need to create a refinancing option for people that lost considerable market value in their properties but continued to make their mortgage payments on time. Refinancing your mortgage via the Obama administration's HARP program could very well help you save hundreds of dollars on month-to-month payments or put you in a far safer loan program, no matter how much your home will appraise for. Is the Obama refinance program the same as the HARP program? The HARP program, also known as HARP 2.0, HARP 3.0, DU Refi Plus, or the Obama refinance program, #MyRefi, is a special government-sanctioned refinance program for usual loans that was updated in early 2012 to help homeowners with minimal or no equity refinance their mortgage and make the most of historically low rates by eliminating many of the regular loan qualifying impediments. The relaxed underwriting guidelines include appraisal values, second lien holders, and interest rate fee penalties. The HARP program was originally established by the FHFA, Federal Housing Finance Agency, in March 2009, under President Obama's Making Home Affordable program to help near underwater and underwater homeowners refinance their mortgages. A number of key alterations were made to the Home Affordable Refinance program, which are definitely having an effective impact on homeowners, who are averaging $250 to $300 monthly savings on their mortgage payment by refinancing into a decreased rate. Underwater homeowners can find comfort in a quote from FannieMae.com. The goal of the HARP program, as announced by the President, is to provide access to low-cost refinancing for responsible homeowners suffering from falling home prices. The assumption is that refinancing their mortgage will decrease their monthly principal and interest payments, or moving them from a much more dangerous loan structure, such as interest-only or short-term ARM, to a far sounder product. Doing this indicates that homeowners refinancing with the HARP program loan should certainly have the chance to obtain lower HARP mortgage interest rates. According to the monthly Freddie Mac Rate Trend Survey, that goes back to 1971, it's apparent that mortgage rates have indeed been very cheap for the past several months. Just one of the crucial perks to suitable borrowers using the new HARP loan program is that the government has put a cap on the rate and fees lenders can charge for adjustments based on LTV, credit, and other factors. These adjustments are referred to as loan level price adjustments, or LLPA, which have previously stopped borrowers from taking advantage of the diminished rates in the market. Fannie Mae describes LLPAs as price adjustments that are assessed based upon certain eligibility or other loan features such as credit score, loan purpose, occupancy, number of units, product type, etc. What does this mean for HARP mortgage rates? In simplest of terms, your new interest rate will be nearer to the cheaper rates of traditional conventional mortgages. How do I guarantee that I get the rate that I want? In a lot of circumstances, loan providers will call for a full underwritten approval before a borrower will be able to lock in an interest rate. Since these HARP loans generally spend a few weeks waiting in line for the underwriting department, your potential interest rate will be in what's called a floating status until your lender can actually lock you in. The lengthier the lock duration is, 15, 20, 30, up to 60 days, the more elevated the interest rate may be. It's actually suitable to sit tight until your file is fully approved and ready for loan documents. It's a balancing act between sitting tight for a specific rate and making sure certain loan approvals and documentation doesn't expire. In either case, a skilled mortgage professional understands how to keep an eye on all of these details. How do I shop for the best HARP program mortgage rates? Simply shopping interest rates will ordinarily lead to an annoying encounter with your HARP refinance due to the considerations defined above. Financial institutions who promise one thing and then change their terms towards the end of a financial transaction with the help of a bait-and-switch marketing procedure give the mortgage sector a bad reputation. The naked truth is that until a loan originator has all of your related information and has had a chance to get an initial pre-approval by submitting your thorough application to a Fannie Mae or Freddie Mac and secured online portal, it is not attainable to acquire a correct rate quote. The very best strategy for getting the best rate on your HARP loan is to shop interest rates by qualifying a lender based upon their knowledge of exactly how rates actually work, as well as their competency to express and communicate economic indicators to you that may likely have a negative or positive impact on the specific HARP interest rate that makes sense for your circumstance. How do I select a lender when shopping rates? Listed here are a handful of useful questions you can ask a creditor pertaining to interest rates to identify their genuine value to your personal HARP program refinance. Is my home eligible for a HARP loan refinance? Is my loan guaranteed by Fannie Mae or Freddie Mac? Here are two sites where you can find the answer to these questions. You can go to Fannie Mae at www.knowyouroptions.com/loan lookup. And you can go to Freddie Mac at www.freddiemac.com/loan lookup. Was your loan sold to Fannie Mae or Freddie Mac before May 31st, 2009? This shows that the lender you originated your loan with ought to have funded your loan with the date listed on the note prior to May 31st, 2009. Are you current on your mortgage payments for your home? Current means that you are not more than 30 days late on this month's mortgage payment. If you sent the payment that was due on the 1st of the 15th or 10th instead, you would still be considered current. Administration and underwriting turn times on these new HARP deals can take anywhere from 3 to 5 weeks to close. Just make this month's mortgage payment versus holding it in hopes that you can leap a couple of payments. Is there very little or no equity in your home? The HARP 2.0 mortgage rules have been changed to allow borrowers with high loan-to-value, LTV, ratios refinance their mortgages into lesser rates. Moreover, the mortgage insurance impediments have been gotten rid of, which means you can transfer between new lending institutions without having it leading to your loan to get denied. This program is designed to assist borrowers who owe more than 80% LTV or loan-to-value on their mortgage. Example, your LTV would be 81% if your balance is $81,000 and your house is worth $100,000. This also means that if your balance is $150,000 on a home worth $100,000, which works out to be 150% LTV, you would still be eligible for HARP.